Hey, what's up, everyone? Welcome back to my world of stocks, and welcome back to our stock market weekly update series. This week, we've got another jam packed market update for you, including big tech earnings from Amazon, Meta, Microsoft, and more. Plus, we'll be looking at what these companies had to say about tariffs and how their stocks performed. And we'll even take a look at some new trade deal updates involving China, Ukraine, and more. So, smash that like button if you like getting these, kind of easy to follow, digestible market updates every week. That lets me know you want me to keep making these for you. But with all of that said, I appreciate your support. Let's go ahead and dive straight into it. All right, so taking a look at the markets first, we essentially had the month of April wrap up this week. Obviously, that started out very rough with the introduction of new tariffs, but over time, the waters kind of calmed a bit, and that resulted in a bit of a rebound throughout the rest of the month, and that's how we kind of ended with the S&P 500 climbing almost another 3% this week. Very strong week, and it actually finished the past month in the green. Again, that's after that rebound from the initial dip. And the same goes for the tech-heavy NASDAQ, climbing almost 4% this week, very strong, and finishing the past month positive as well. So congratulations to everyone that bought the dip. I know I put out a lot of videos for you guys saying that I was buying heavier on the drop. Of course, there's always going to be that little vocal minority that, might leave some angry comments or call me dumb whenever I'm buying stocks because they love to be pessimistic. They love to be panic selling. Look, my opinion on some of those people that leave those comments, I think a lot of them are just short-term traders. Maybe they see my videos pop up on their feed and it kind of makes them angry because I'm always very optimistic about stocks. So I love to go in and buy stocks. But again, that's the kind of just a vocal minority. I really feel like most of you guys, my core audience that is always leaving, super nice comments, very supportive and everything. I feel that the rest of us, we're very long-term minded investors. And so we know that when prices are going down, that's actually the time to be buying. It's the old adage of buy low and sell high. I don't necessarily sell high either because I like to really invest very long term, but when prices are going low, you got to take advantage of those lower prices. And we know, again, as long-term investors, when prices go down, that's a good thing. It's something to be happy about and to be positive, optimistic about because it's a buying opportunity for the future. So again, congratulations to all of you that got to lower your cost basis on some of your favorite stocks out there. And by the way, too, if you didn't take advantage of the dip, don't even worry about that. Don't feel bad about it because there are still tons of undervalued stocks out there. I talk about them all the time on this channel. And I promise you guys, this year is going to continue to be super volatile. So don't let these little movements in the market phase you. Keep your eye on the long term, but just, don't be afraid to invest in your favorite stocks when you think the price is fair. When prices are coming down, make sure you take advantage of those opportunities. At least that's just what I do. Do whatever you think is best for you, but that's what I do. And I'm going to continue to show you that on this channel. Of course, a big reason why the market has been rebounding, though, has also been due to a better than expected earnings season, with this past week seeing some mega giants reports. So let's catch you up on some of them now, and I'll just run through all of these really quick one by one. So starting with Amazon, one of my absolute favorite stocks, they had a beast of a showing, putting up over $155 billion in sales that somehow still managed to grow by 9% year over year, almost a double digit right there, with profits also soaring up to $17 billion too, all of which beat analyst expectations, by the way. But surprisingly, the stock was still flat for the week after they gave maybe a little weaker guidance than Wall Street wanted to see, forecasting revenue growth between 7 to 11% for the next quarter. The thing you have to remember about Amazon, though, this is what I've always kind of seen with them throughout all my years of investing in them, is that they tend to lowball a lot of their guidance and they always end up outperforming. So I actually try to look at the top range of whatever guidance they put out there. And so if you look at that, it would be like 11% growth. That would actually be really good. So I wouldn't worry at all about these results. I actually think that they were fantastic, and seeing a 17% jump too in cloud, despite already being the market leader, and that, of course, being their main profit driver, just shows how incredible Amazon continues to do. overall, I would say that the market is just kind of nitpicking a little here. That's why the stock didn't really climb much. And with the stock actually still down over 20% from the top, I actually think that it's a great pickup right now, too. As far as tariff commentary goes, the CEO did note that the new tariffs haven't really slowed any demand for them yet, but they are just kind of telling their sellers to move inventory to the US, as soon as possible to kind of help mitigate any possible effects from tariffs later on. I continue to believe, by the way, that tariffs are not going to hurt Amazon as much as people think it will, because my prediction, I'm just kind of speculating here, but I feel like if prices are getting expensive, I think that's actually going to drive more people to Amazon because they tend to offer better pricing than most. So I actually think we could see a rise in traffic for them. Anyway, moving on, we had another tech giant in Meta also report this week, who blew past forecasts, posting over 42 billion in sales, which was up a whopping 16% year over year, with another 16.6 billion in net income. That was up 35% too. So absolutely incredible. The social media giant just continues to be on fire, and the strong advertising revenue is also a welcome sign to analysts, because it's signaling that the economy is still holding up pretty well despite all of the macro challenges, taking shape this year. And their stock rose over 7% as a result, although it is still down about 20% from the top. So a little decent dip there for anyone not yet in this, cash generating social media machine. Speaking of cash cows, though, we also had the mighty Microsoft report, who may have had the strongest showing of all. I don't know. They did pretty good, posting over 70 billion in sales, which were up 13% year over year, with cloud being another big driver for them, up a massive 20% year over year, reaching more than $42 billion in revenue, while Azure Cloud Services grew another 33% too. Microsoft too beat expectations, with EPS growing 18% as well, and the company even downplayed tariff concerns, with the CEO noting relative insulation from tariffs because of their software-focused business, saying, quote, "Software is the most malleable resource to fight any type of inflationary pressure." And their stock rose a whopping 11% for the week as a result, which I was also very happy to see, because Microsoft remains, at least at the moment, my number one largest holding in my personal portfolio. Unlike the others, though, this tech giant remains trading near a record high, as you really have to pay a premium for that high quality that Microsoft is. The tech giant that seems to be having some of the lowest growth, though, of the bunch these days continues to be Apple, who is so massively large at this point, posting another 95 billion in sales. Is just having a really tough time trying to grow, only posting a mid-single digit 5% growth rate, which, again, it's not bad for their size, obviously. Still, services revenue continues to hit new record highs, helping their profitability get even better too, as they beat on EPS and even announced another 100 billion in stock buybacks too. Now, unfortunately, the stock actually fell slightly for the week, down over 2%, likely because of a combination of low growth, where iPhone sales only rose by 2% year over year, as well as commentary from CEO Tim Cook about tariffs, warning that Apple could see a charge of close to $1 billion next quarter if all the rates stay the same. He did, however, note, though, that they are already moving their supply chain, have already been doing so, where most of the supplies for the US market are going to be just coming from India and Vietnam, which are two countries likely to get deals done with the US soon. So I wouldn't really foresee this being too big of an issue going forward, as he also noted that Chinese supply will be used for the rest of the world outside the US. So as long as deals get done, they will probably be fine. But the stock is also down now over 20% from the top. But I don't like this one, anywhere near as much as the other tech giants that we just covered. Having said that, we did, of course, have some big non-tech giants report that also tend to have a lot of influence over the market, like Coca-Cola, for example, who beat expectations. And despite sales being slightly down, the market seemed to like their efforts to mitigate tariffs, with management saying that they will use plastic bottles and offer more low-cost packaging to help avoid tariffs related to aluminum and other materials that you would see, like with cans and stuff like that. Still, the stock ended the week about flat because of the overall mixed kind of results. Leading biotech Pfizer also reported this week, with sales still falling, coming off the pandemic years, still having a tough time, comparing to those. but new cost cutting efforts actually boosted profits, helping them beat expectations thanks to $1.7 billion in new cost savings. And when commenting on tariffs, management noted that they have plenty of US production capacity to mitigate any negative effects from tariffs. And as a result, the stock actually climbed by about 5%, although it is still down a giant amount from the top and continues to be what I feel is one of the most undervalued dividend stocks in the market right now. Okay, moving over to the tariffs portion of the video. This week gave us some important updates on the trade front. Now, on Wednesday, for example, the US and Ukraine actually signed a landmark minerals deal that will give America preferential access to their rich mineral deposits, which are, of course, hugely important for many parts of tech. And in return, the US will be supporting Ukraine's rebuilding efforts from the war with Russia. And this is a huge deal, guys, because China, of course, we all know, dominates the rare earth minerals kind of space. And so with rising tensions between the US and China, being able to get a steady supply now from an ally instead just really helps America diversify and be a little less reliant on China for these critical resources, and may even give them some leverage in negotiations too, if they're relying a bit less on them. Speaking of which, of course, all eyes continue to be on the rising tension between these two countries. But on Friday, we actually got a positive update. This might have been actually Thursday, but China said that they are evaluating the possibility of starting trade negotiations with the US after officials reached out to them to start tariff negotiations. This also is coming after US Secretary of State Marco Rubio said that China wants to meet and talk with them. And last week, of course, we even had China waiving tariffs on many US goods in what could be seen as a sign of good faith. Now, of course, we'll have to wait and see how all of this ultimately plays out. But I continue to tell you guys, it's only a matter of time until a deal gets done. That's my opinion. There's no way the two biggest economies in the world keep these gigantic tariffs on each other. Something will have to get signed eventually, probably in the coming months, if I had to guess. The only question is just how much damage gets done until that happens. But right now we're in kind of the middle of it, so it's hard to see exactly what the impact is at the moment. But even then, that's not something that, as long-term minded investors, we should be too afraid of. If anything, if that causes the market to actually fall, we have to see that as a buying opportunity. Again, just like we had in April and we might have in coming months. Now, I know that it's hard to treat recessions and market downturns that way because when they happen, everyone is freaking out and panic selling, and you will even have like a bunch of pessimism out there, not just like on the news, but even on social media. All the bears come out of hibernation, and they start calling everyone idiots that is buying on the dips because they just imagine that everything is going to collapse and it's the apocalypse at that point for them. But in my opinion, you have to kind of ignore that noise and just think long term, because the market always recovers long term. And sure, maybe this time will be different and the US completely collapses into oblivion. But if that happens, I think we'd have even bigger issues to worry about anyway. So I'm going to be buying on all the dips and all the crashes that I see this year, next year, any other year, regardless. And by the way, while we wait for a deal to get done with China, the US is still negotiating with key partners all over the world that could definitely help lessen the impact and its reliance on China, like, with Mexico, Canada, Vietnam, Japan, India. Some of these are hugely important. I always call India like the mini China, because if we get, better trade deals done with them and strengthen our relationships, well, it could be huge for us long term, give us a little more leverage negotiating with China and less dependency. And by the way, I say us because I live in America and I invest mostly in American stocks. So obviously I want America to come out on top, but I don't mean any disrespect to other countries out there. I want everyone to prosper, as fairly and equally as possible. But these trade deficits do need some work. And I think we could make some fair deals out there that will eventually benefit everyone, longer term. I do sound like a real optimist though, don't I? Well, that's because I am one. And I believe that you are the energy that you put out. So stay positive, my friends. I hope you enjoyed this week's update. I'm going to be here with you every week, helping you all along the way. Let me know your thoughts down below. Any questions you have about anything we discussed, I'd love to hear from you. And I appreciate all of your support. It means a lot to me. Thank you for everything. And I will catch you in the next one. All right, take care, my friends. Bye bye.